Welcome back. Let's now shift the focus to commodity markets. We have Manisha joining in with all the action. Manisha, so what's top of mind for you today?
Well, I'm looking at the crude oil prices, Surbi, because if you look at the month of September and the quarter gone by, precious metals and industrial metals have done very well. But you can't say the same about the crude oil prices, which actually put in a decline of 9% for the month of September. And with that, this was the largest monthly decline since November 2022. And not just for the month. When you look at the previous quarter, the crude oil prices have seen a decline of nearly 17%, which has been the biggest quarterly loss, by the way, in last 1 year as well. Well, what really has been weighing onto the market is the China manufacturing numbers that came in yesterday, showing that there has been a contraction for a fifth straight month for the month of September. Also, Libya has been saying on and off that they would resume and start exporting 500,000 barrels per day as early as next month itself. Saudi Arabia has been coming out with statements suggesting that they will abandon the unofficial price target of $100 a barrel and they are willing to work with something lower. And then OPEC and allies already once have delayed their output increase of 180,000 barrels per day. That comes in on the market from the month of December as well, and that's exactly what the street is looking at. The reason that you're looking at $70 holding for the Brent prices is, one, there are escalating tensions in the Middle East. There is every day one headline coming in from there, and then the U.S. crude stocks also seems to have declined in the U.S. The markets also are looking at almost 20% of the oil output shut in the Gulf of Mexico. This is after Hurricane Helen, so that is what is providing some premium to prices. But when you look at the overall markets in 2024 until now, and we've done 3 quarters already, the high for the Brent was at 91.2. The low that we saw in the month of September was at 87. And we are working with the low was at 69. And we are working with that 72 at this point in time for the month of October, the first day that is. When it comes to WTI, well, the high has been 87. September low has been almost 65. And we are trading at around 68 to 69 at this point in time. So the kind of lows that we saw in the month of September, October has started on a strong footing, let's say that. Well, going forward, the expectation is that for this year, until the kind of numbers that we have, the expectation is that the demand growth has been anywhere between 1 to 1.7 million barrels per day. Clearly, OPEC has been suggesting it on the higher side. But going forward, when it comes to prices, it clearly is a divided street. UBS, for one, says that they're looking at $75 a barrel of an average price for the next year. Bank of America says that 75 is what you could be looking at in the second half of this year. Goldman Sachs has lowered its average for next year to 80. And Citi, clearly the most bullish, most bearish rather, when it comes to the crude oil prices, $60 as a possibility for next year is what they're anticipating.
All right, Manisha, thank you very much for that. So those are forecasts as far as oil is concerned.